This is the Silver Bullet recap video for May 4th, 2023 AM session. I only took one trade. Took it on a sim account because I passed my 100k static Apex challenge yesterday. Didn't want to touch that, obviously. But I wanted to practice. I wanted to participate. I'm really enjoying these Silver Bullet trades. So here we go. This is the 10 a.m. to 11 a.m. morning session. I've condensed this video down as much as possible. I'm trying to keep these short because I think there's going to be a lot of them. I really like recording my trades. It's been helpful to review. Even the bad ones, even though since I started posting this on YouTube, I haven't had a losing Silver Bullet trade quite yet. I know it will happen, and I will post those eventually. This has just been a remarkably good week for that particular trade setup. So here we are, we're in TradingView. Sped up recap video. This is live, or this was me live, analyzing the charts here. At this point, if you were in the markets today, you know that we were rather dumpy. We were going down, and I definitely had that bias. A lot of things indicated we were going to continue going down. The most important things for me in this moment were the purple line below is the previous week's lows that we were threatening. And then we have the daily, or a daily fair value gap below that. And I don't think appears in the video, but it's there. And it just kind of seemed like it was inevitable. We're going to breach those levels. With that being said, though, you never know. In news days or news weeks, you never know. So I'm trying at this point to remain as neutral as possible. And in fact, I believe I annotate that eventually here in this video to myself to try to be fluid and be open to the direction, because 5 handles on price action like today doesn't seem like a lot. It could easily get 5 handles up if we wanted to. So yeah, here's my notes that I'm kind of keeping, not necessarily for the video, not necessarily for you, the viewer, but for me in real time. I like to kind of have my prevailing thoughts written down in anchor text, and as I change or pivot my own mind, I like to keep those annotations, kind of keep myself centered as I'm navigating price action for these 60 minutes here. So eventually I do address the fact that I am calling these market structure shifts. I understand that I'm on a 1-minute chart, that people have different names for this. Change of character comes to mind. I know that's one of them. These aren't huge, big, long-term swing highs or lows that we usually annotate. But I do like to keep track of these. These are early indications for me to let me know what direction we might be heading in. But also it's part of my requirement for the Silver Bullet. This is me being absolutely adorable and hilarious. Looking for that displacement, and we keep trying like this, and then it pulls back. We've been spoiled this whole week with the Silver Bullet trades. If you participated, we got setups right away. AM and PM. So I think I was expecting that today. But another reminder to sit in your hands and wait. I haven't had it where there was no setup presented yet since I started trading these. And I'm sure that will happen eventually. I know it will, but as of right now it hasn't. So I think I'm getting a little too excited sometimes. Now, one of the things I haven't talked about yet in these videos is I am incorporating SMT divergence into these trades now. You'll see me check the chart a couple times here. I like to use the 5-minute. Here we go. Checking it. I like to use the 5-minute, but now I've been using the 1-minute as well. To kind of, again, give that early indication that a move may be happening, or in the midst of happening here. So I'm trying to do my best with that, and then reviewing the dollar or the Dixie DXY. That is something I'm very new at. I've noticed that that's fallen out of correlation with ES this past week at times, and that confuses the hell out of me. So I'm still learning how to use the DXY, but as of now, I've thrown it on the chart. So here we get what I'm going to loosely call market structure shift, but as I notate here, we need to see some energy. That's not really anything at all at this point. So I moved the MSFs up to where the next swing high would have to be breached for us to have a shift in structure. Again, this is wherever school you come from, if it's internal structure or it's a chotch or change of character, however you say it. That's what I'm annotating there. And here's me making that same exact note that I just said out loud. The problem that I have is I learned smart money concepts from somebody who appropriated ICT concepts and tried to repackage them and claim that they were their own. Learned a lot of great things, but I still use their terminology because it's kind of ingrained in me, and I'm having to rewire my brain now that I'm studying ICT and ICT's concepts. So here we go. This, I thought we had it in. We were good. We had a market structure shift, huge impulse to the upside, and then it just absolutely melts. However, I was equally excited to see this as well, because now I consider it a liquidity sweep up above. Now what I'm doing here is I am annotating every fair value gap, every breaker that could be involved in this retrace. I like to stack the colors like this because you notice how that green gets even darker. It's almost like a heat map. And so I like to stack them like this. Again, gonna wait for that candle raid. That's what I want to do. However, if you notice, price absolutely surges back up, hits that dark green area of the breaker inside fair value gap. And when I saw that, I wanted in. However, I was slow to react. So I do get in here. However, I get in a little bit late, which puts my stop loss, I think, at a kind of an awkward level. Now, I was tempted to raise that above that swing high. That's where I would have loved to have that stop loss, but I don't want to exceed 20 ticks or 5 handles. I don't want to do that. It seems like bad money management to me. I can always get back in the trade again, so I leave it. And I'm just going to let it ride. Ideally, I would have had a better trigger finger or had a limit order up at that top of the fair value gap there where my heat map that I created was located. But I didn't, but that's okay. Price is about to hit my target here already. Now this is a sim account, so I do play a little bit more aggressive. I move my stop loss, or my take profit, I move that down to 34 ticks because that is the next draw on liquidity. Again, I'm real dumpy on the day. That's my bias at least, so I don't think I would have done this with my real money or prop firm money. I think I would have taken my 5 and got out. But I'd like to eventually build up the confidence to extend those TPs to those draw liquidity lines. And even my break even, I'm not using break even as fast as I did the last 2 days. If you've been watching my last videos, again, sim count psychology differs. No matter how much I try to treat it as a real environment, it differs. Now, recording this and knowing that people are going to watch it, that did put a little extra added pressure on it, and that was nice. So here we go. If we had a candle raid, we would have got 5 points as well, so I could have waited, which I annotate and note that. And that's it. That's the trade. It worked out really, really well. I don't think I'll be trading tomorrow, so it may not be a video on the weekend, but I'll be back next week to trade the real prop account, or the PA account from Apex. And then here I am checking divergence. There was divergence on the 1 minute to help solidify my idea that the trade was going to work. Okay, that's about does it. Thank you very much. I'll see you in the next video.